You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Gurwitz, Managing Director of the Charles Nenner Research Center, their website, charlesnenner.com. Welcome to the show, David.
Thank you. I appreciate you having the time to listen to me, and hopefully we will enlighten your listeners a little bit.
Right. Now, let's talk about crude. Western Canada, not including British Columbia, really hit by lower crude prices. Mm-hmm. What's the long-range forecast there?
Well, I'm into long-range, short, and medium, because that's kind of what we try and do. And as I always say, your listeners are welcome to write to our site and sample our research for a month, as many do. So because we cover stocks, bonds, commodities, and currencies in using our methodology, which is cycle and target based with other indicators as well. So we called the top in crude at $97 several months ago. It was a great call. No one thought it would come to here. We called the bottom at 50. It's not, let me read you what we wrote. I'll do it step by step, so that's probably the easiest way to do what we wrote on yesterday. We send out an email 3 times a week, as you know. Although there's a projected short-term cycle high for crude later this week, we expect another bounce. A close above 51.70 still needed for a buy signal. And basically what we feel, we sold at 97. We called the low at 94. It bounced. It needs to close above 51.75 for a renewed short-term buy signal. 70 is a big number. We think if it gets back to 70, it's going to go to 100 again. We don't think it's, like Goldman Sachs says, going to 40 and 30. We don't think so. We think it's going back up. Even though, as I'm talking to you, I'm reading several other research reports. I get a lot of stuff, and clients always send me stuff, and it's a mess in the crude business. People are, Apache just lost $4 billion and et cetera, et cetera, et cetera. So it's a real mess. And I was just published in an article in Oil and Gas magazine, Oil and Gas Trader, Oil and Gas Investor, where I showed that Schlumberger, we called the top and the bottom, and we think it's going to come back up. It's right now, it's obviously in the 50 range. We think it's going to go back to where it was. It's just going to not happen next week, but it's not going to be 2 years from now.
Why the optimism for the crude business?
All based on cycles, in our opinion. We don't follow the news. We predict the news. Yes, you and I have spoken. We think the repeating patterns from the past determine what's going to happen, not what's going to happen determines the prices. It's a complete switch from the normal way people do it, and it's not so easy for people to get their hands around, but we have thousands and thousands of clients, so obviously they somehow think we're making some sense. We called years ago when crude was 147, Charles went on CNBC and called for deflation, and they kind of laughed at him. If you remember, it wasn't that long ago, 4 or 5 years ago, and 6 months later, crude was $49. So people forget that things could go way up and can come way down fast, and that's just human nature. We don't forget because our system is constantly looking back. Crude has only been around. I mean, it's been in the earth since it's been created, but it's only around 100 and some odd years. It's not like wheat's been around a long time, and we have wheat prices going back thousands of years and interest rates going back. Crude, we only have cycles going back 100 and some odd years, and it really didn't start to go until not that long ago. So we've had a tremendous increase in overall crude prices, even $50 compared to most of the pricing for up until the 70s and stuff. This is still way high. So people can't imagine it got from 100 to here. They can't imagine go back up to 100. We can. It just has to get in steps. That's how technical analysis works.
So really, the political scene out there with ISIS using bootleg oil to fund their terrorism and so on, that's not a factor.
No. I was interviewed by Newsmax 8 months ago, and ISIS was just getting a lot of press. Not that they don't get press now, and they said, well, what they're doing, won't that cause an oil increase? Because they're going to take over and this. And I said, no, what they're doing is irrelevant. Cycles are topic. So who was right? So I don't, Jim, I don't mean to disparage the questions and the concern about the news. You're in the news business. You just know the way we do things. We don't assume the news runs the show. We think the cycles from the past and other indicators, when lining up, run the show, and then the news comes along in accordance with the pressure put on by the cycles.
Well, let's go on to what the U.S. dollar is doing and currencies in general.
Great question. So we have for years, and, again, no one remembers. I shouldn't say no one remembers. No one thinks about it. For years we've been saying the dollar's going to be strong until this year, and then it's going to top, and your readers, your listeners should write in. We just covered on Sunday. On Sunday we send out charts. And let me read what it said on the dollar. The DXY is the dollar index. I'll read it to you. Longer-term DXY cycles have topped, as well as short-term, and we actually show them individually on the charts. Normally, we combine them, so you only see one cycle line, but it's the amalgam of many to show tops and bottoms. While we have no higher targets at close below 95 needed for sell signal. So the run-in to the U.S. dollar, which has been the last several years, in fact, it's been quite strong, we think is going to end, even though we think there's going to be a down move in the dollar, then it'll come back up towards the end of the year, and then longer term down, and the euro will be surprisingly stronger. That's the big picture. Now, what we're looking for, and let me take a look at what we were sending out, is we believe, here we go, that right now we would be looking to buy the Aussie, which we've been calling to decline, which it has, and the Canadian. And one way to play them is the ETFs known as FXA and FXC. You won't get the same bang as you would in futures, but a lot of people don't know how to play futures. And we think the yen is something that's going to be a good buy. Keep in mind, again, for your listeners, we called the Aussie and the Canadian 5-6 years ago when they were each 68 to the dollar. We said they were going to go to par, and nobody thought that would happen. And they went past par. Now they're back again. I mean, the Aussies come back into the 70s, so it's really come down. And it's easy to say, well, the Aussie is a commodity currency tied to China and tied to crude prices. Same with the Canadian dollar. Therefore, as the crude comes down, the Canadian value will go down. But we don't see that as an always correlation. And it just so happens now we see that longer-term crude is going to be up, and those particular currencies we would be buying now, so we think they're going to go up. So there is, in this case, it looks like a correlation. Again, that doesn't mean just because crude goes up, the Canadian and the Aussie go up. It generally does, but not always. Jim, people ask what about gold? Is gold going to go up in deflation or inflation? And I say yes. What does that mean? Because historically it's done both. So it's not an indicator just because it's deflation it'll go up, or just because it's inflation it'll go up. It depends on the cycle.
We'll have more with David Gurwitz right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to David Gurwitz, Managing Director of the Charles Nenner Research Center, their website, charlesnenner.com. Well, we've talked about currencies. What's going to happen on the major stock markets?
Well, let me read where we were holding now. It's at a kind of a inflection point right now. We think April's a major top, and that's what we've been saying for a while. Right now it's overbought, and Europe and the United States are separate. We cover Monday, Wednesday, Friday S&P futures, NASDAQ futures, and Dow Cash. And we also cover the DAX, the FTSE, which is England, the DAX is German, and the AEX, which is Dutch. Charles and our CFO are both Dutch, so they have a familiarity with that, and it's fairly well traded. We also cover the TSX, which is the Canadian market. We also cover the VIX, which is something your listeners should really consider investing in, because so many ways to do it, and it's a way to play the whole market. Like, the VIX just went up because the market just got rocked. We had said the VIX was going to go off its sell signal to a buy signal. So that's one easy way to play the markets. People have long positions. They hedge it with the VIX. We don't think it's a good idea to have long positions after April. Everybody has a different viewpoint, but that's kind of the overall picture with the markets. Is a major top in April, and over the next several years it'll be kind of sideways. not going much higher, if at all, and then starting in about 2 years or so really gets bad for several years. That's the longer term picture. Now someone could say, how can you say that? And the answer is cycle. Look at the last 6.5 years. It's been up, right? So it can go down, and people like it when it's up. They don't really like it when it's down unless you're short. But that's kind of what we see, and I'm not giving levels at this point, although longer term levels are substantially lower than where they are now at the end of the decade. So that's kind of the big picture over the next 5 years for stocks. Obviously individuals will be different. The drug stocks might outperform, and food stocks might outperform. Certain areas will probably outperform. But overall, I wouldn't want to be just long stocks like a lot of brokers and money management firms want people to be, although the last 30 some odd years since the Dow was 1,000, it's now 17 something. It's been up 17 times, so it's been a good strategy. But will that happen the next 7 years? I don't think so.
And here, when you said food stocks might go up, in Canada, Loblaws, a major food company, announced a $1.2 billion expansion.
Right.
And their logic was, well, electronics like Apple, people buy maybe a few a year, but food you buy every day. So that's the market we're going to get into.
Well, again, there is a logic to that. But if that were the case, like people always say with real estate, population is increasing. How come real estate doesn't go straight up all the time like food? It goes through cycles. There are periods of up, periods of down. I'll tell you a quick story. When Charles was at Goldman Sachs, years ago, we're talking, in 15, 20 years ago, maybe, he had a client that was a big owner of oranges down in Central America. And they didn't really have the sophisticated hedging techniques they do now, nor the computer ability they do now. So he said he saw something happening in orange juice futures 9 months out, and he told this particular wealthy guy he should somehow hedge whatever they did back then. And he did it. And 8 months went by, and the weather was great, and oranges were, selling the normal way, the normal yield of its crop. And he called up Charles when he was at Goldman Sachs, said, I don't see anything. I'm going to lose money on this financial thing. He said, you just watch. And then a week later, there was a major fire in the orange groves. And I think a third of the crop got destroyed, causing the prices to go up substantially. But he lost a lot of his crop. So he lost a lot of money on his crop, but because he had done a financial transaction to hedge it in whatever archaic ways they hedged 15 years ago, he made money. So even Charles, when I first met him, he said, then I started to see cycles predict even things you can't imagine. So when people always ask, how can you predict an event that you don't know, the answer is it's built into the cycle somehow. I don't know why. Which leads to our next question. I suppose you're going to ask about war cycles.
Sure. They're green and have knobby tires, right?
Please, all you listeners, write to me. Go to charlesnander.com and say, David, you said we'll send out some charts, including a study we did a month ago, 5 weeks ago, I don't remember exactly, on war cycles, where basically there's been a major war in the second decade of every century going back the last 2,000 years. And we're sitting in the second decade of a century now. And that's kind of his whole point. Obviously, 100 years ago was World War I. 200 years ago was the War of 1812. But this goes on going back 2,000 years. So that's one cycle that's not so pleasant. And Charles is kind of known about this, and a few other people are talking about it. And you can see around the world things happening that could lead to that. China, the Mideast, Ukraine, Africa, South America. There's also sunspot cycles, which people, kind of poo-poo, but that also affects people's mood. And sunspots have also topped, so they're down. And Charles has been calling this for years. He said on CNBC, I think 7 years ago, 2013 would be like a major top. Okay, we're past it now into 2015, but that can be a swing of a year or so. So this is what we're looking at. So when you try and piece it all together, major top in stocks, interest rates, obviously we called that many years ago. that bonds would be a good buy for years, which they've been, and longer term they're going to be down. So it's going to be difficult for people, we think. With stocks down, bonds down, gold will be back up, crude will be back up, food prices will be back up. You know, it's going to be difficult to make money.
So where should people be putting their money right now?
Good question, because it's not going to be so easy. Like the last 30 years, buy the Dow, you're up. It's not going to be so easy, and then there'll be bank failures also. So what happens if you stick the money in a bank? What's going to be? And I have a lot of that. We have clients of all types, sovereign wealth funds with hundreds of billions, to individuals with several 100,000, institutions, family offices. The richer ones always say, I don't need the next dollar, but I want to keep the dollars I have. Where do you recommend? And we say it's not such a simple answer, because there's certain banks that I don't want to discuss now that over time look like they really disappear. Name banks. So, how do you know just to take your money in the bank? Even if you're getting less return on capital, the main thing is to be able to get a return of capital. And we think it's going to be pretty unpleasant. So to some, just begin to think about it. People went into gold, and 3 years ago we called the top in gold, so it was not a good idea to do it. And even now, gold is on a sell signal right now. We think its first target's 1140 and then 1100, but longer term, we think it's going back up. So how does someone, especially Canadians, live through this longer term down move that we called? It's not so simple, and not hedging it, because it's very hard for the typical person to think hedge. They just don't do it. I see it already. Professionals, what they do. So you're asking a good question, Jim, and I don't have an easy answer for that. But I do recommend your listeners write in and watch what we say, and hopefully it'll help them, in this process, thinking about the choice between sticking money in the bank, getting nothing, or maybe investing based on cycles and having a higher percentage likelihood of a return.
Well, that sounds like great advice, David, and we'll be talking to you on a regular basis now, every couple of weeks, just to make sure we're on top of stuff.
Yeah, I love it. I enjoy your letting me speak. You're a great questioner and great listener. In New York and the places here, sometimes they only give you 30 seconds, and they're going to interrupt. You don't do that, and it's a real pleasure. And let me express my thoughts, because we do work hard at this. We send out a one-page email, which I think you get, showing what we do, but it takes hours and hours to write something that can be read in 4 minutes.
Well, I used to work in headline news, so I had 40 seconds to explain very complex things.
Right.
And that's just the nature of the business there, where, it's a very fast news cycle.
Exactly.
Here, people have a chance to listen and listen back and listen again if they miss something.
That's great. And I'm honored to be on, and I appreciate it, and I look forward to the next one.
I do too. My guest has been David Gurwitz, Managing Director of the Charles Nenner Research Center, their website, charlesnenner.com. And as David mentioned several times during the show, check out the newsletter. It's got the details on what we talked about. We just scratched the surface. Isn't that right?
Oh, yeah. We just scratched the surface.
You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net, and check out our popular YouTube channel, Talk Digital Network. You can forward questions or comments about the show to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.